So, hi guys, I'm here with Yard and obviously for Yard. And today the discussion will be about how to thrive in financial market. What are like the skills that we need to thrive in financial market today in 2025. So, financial market, what's objective of any type of guy that is entering and wants to perform in that market? Obviously, trying to always have the highest possible of ROI over our investments. So the revenue that we have in comparison with the costs that we have to support the investments. So basically the ratio of what is needed to have a unit of profit by unit of spend, so needed by having like the ability to get this initial amount of money, which neither always is easy, neither always everyone has like a good amount of money, but the ability to be a good investor is something that we can have by trying to maximize so the unit of profits that we can get, the amount by unit that we invest. That's what the Roy and Reich try to calculate. So it's really important to understand that if you want to get good performance in the financial market, you're gonna have to get like a comparative advantage in comparison with someone that you're trying to fight for that profit. So it's like investments is like a behavior of a type of game that the sum is gonna be zero. So the same amount that you are winning, it's probably the same amount that other ones are losing. So it's like it's something type that you can call as a competition. So as a competition that I think it should be seen it, you should see it as you have to get attention that you have to get some type of comparative advantage, or you have information, or you entered in a surf in a hype, something that's gonna enter in a hype like that the past year was the microconductors that were something that probably by being inputted in EAs, and EAs will be like the news type of surf that people and tech will invest. The microchips will be something and are something that are really needed, are like one of the components that are the most important in any EA that you're gonna see. And so people that invested in ETF, that's like a type of active that is existing, that it kind of condensates the majority of actives from some specific class. In that case, the ETF, it's kind of make as a reunion of the biggest type of companies in the microchips industry and the ones that performed at 20, 25, 30%. So it's obviously something that's really high in comparison with the average of market. The index that we call that is like the basis of a market, that's determined what is like the average. That is the S&P. That's the one that as a reunion of the biggest 500 companies in USA. It's kind of like something that we can say that's like the performance of the country which these companies are included on, that is the USA. So now with that understood the basis, what we want and we have to get deep on is build our comparative advantage, how to get the knowledge, how to apply the knowledge. So first of all, it's really important to understand what are like the existence, what are like the actives, the platforms which we can do our investments. And so building since the basis of the journey of an investor, trying to build so a comparative advantage in comparison with other ones, and how you can build a comparative advantage for some type of company that doesn't kind of put you a high percent of taxes over so the amount that you earn. It's something that will be intelligent to look for, to invest, to search, to do this type of analysis. Obviously going to be useful. Having some type of company which you can invest, a bank that just kind of will take away from you 2%, 3% of your earnings in comparison with other type of institution that if you invest on them, you're gonna kind of will get less amounts than you would if you did invest in other type of institution. So choose well your bank will be like your first type of trick point that you have to look on. You have to understand where you're gonna do, because it's something that already has a really good important role to determine what's going to be your earnings in your investments. So first, choose well where we gonna invest, and understanding obviously words like the ability and what is open for you to invest by choosing a specific platform or bank. You have to understand if we have pretensions to invest in some specific active as is crypto or is other type of thing. You have to get in count if the bank where you're going to put your money or other institution, financial institution that you can invest in financial market, you have to get assessed from what your range of actives that you can invest by choosing to put your money on some type of institution. So passing this type of step, you're gonna now have to look from doing the right choices. And obviously by doing right choices is simple. How it works, the process of getting earnings from financial market. What are three types of things that you can earn? You can earn by valuation, so you buy a stock, you buy other type of financial active, and you can earn it by selling in a later moment by higher price that you have received in comparison with the price that you have to pay when you got your active. That's one of the type of earnings that you can get, is the type of earnings that comes by the simple valuation of market, the evolution. And by that, what's important? What defines the price of active? Price of active is something that follows like a simple trend, that as well something that's applied in our economy. The comparison between the offer and the comparison between demand. Which more demand the type of active as, higher so will be the perception of value. And obviously if it's something that happens in the same way that the offers remains the same, it's obviously something that's gonna put a press to the price of active to increase. And what increase the demand? So what, when you try to get a earning by having valuation, so trying to sell in the future something higher, in higher price than the one that you got to pay off, you have to look what's going to be the evolution of the demand by your thing. And what increases the demand of people is what increases the perception of value. And what increases perception of value by active is the expectations that we have that this investment gonna create some type of earnings that kind of comes with the second type of way that you can earn money in some type of investments that you can do, that is by the specific type of a price that someone, as you have deposits, a company can give to the investors that invest on them in order to as well establish a comparative advantage in comparison with other companies, that is pay dividends. Paying dividends, it's the second option, and obviously something that neither all actives can. You can receive it, you can receive it in stock, is an example, and the perceptions of what's gonna be like the probability and obviously the quantity that the company gonna give me back in terms of dividends, it's something that has obviously a direct type of correlation with the ability to generate earnings, the ability that a company can generate profit. And so with the profit, that's like the rest of what rests of revenues by taking off the amounts that were put on the debts that you have to support operational activity, and to give, and that it's the money that normally companies does give away for the investors as something that they claim as a type of a revenue by people investing on them. It's something that's what they call reciprocity, and people obviously they kind of understand that if some company is going to have like rentability, it's probably so they going to give me a lot of dividends, and so I'm going to get this type of stock. And so by getting and wanting, I'm going to increase the demand by active, and obviously, or normally, companies they're not always try to create new stocks to put in market, and so this creates a inflection, and so the price increases, and smart investors that already were and previewed that company will enter in and will spread good information around the market, and people so will perceive this company as good, they will try to gonna enter in the surf. But the people that already entered in the wave really early on, they obviously they will have higher probability to have so a higher valuation in the actives. But obviously for that you have to get a comparative advantage to understand what's the wave that you have to enter. And this is obviously by a bit, and you have to be honest, people have and spend their times doing the research, getting knowledge. It's really important to get knowledge. And what these people do, they do for fundamentals. What's like something that are the foundations to make a good business, a business that is better than other ones, is the ones that in the comparative advantage, something that the other companies cannot offer in the same way with the same value. For example, comparative advantages that Coca-Cola can have in comparison with the other type of companies of drinks is the brand that they have built. Coca-Cola is something that is top of mind in any type of consumer when they want to try to drink something. In comparison, other type of things, another type of brands, they're not something that is remarkable. And so when I'm with the willingness to spend money in drinking something, I'm gonna easily more remember the Coca-Cola, and so decreasing the opportunity cost of buying Coca-Cola just by having a higher ability to remember the possibility that is the existence of Coca-Cola, and so the possibility of drinking them in comparison with without having even the consideration and even the knowledge that something exists, some type of random type of brand that can exist in drink market. So it's a comparative advantages that probably people look for. It's what Warren Buffett would call as a mode, something that people have comparative advantages. Example, Elon Musk. Elon Musk as a founder of Tesla, the ability of him applying first principles, that's one of the mental models that Elon Musk uses to help and to build so their approach, their business, it's something that they have again a knowledge over their other competitors, and so by applying first principles they always comes from what's fundamental truth in physics, what are the physics laws that are foundations and are truth, and so they build over them to always trying to be creative. It's trying to disconstruction what we kind of know or think at least that's truth, and by this construction by what is a fundamental foundations of truth, they always gonna have like the ability to create new things, always with the to idealize being more efficient and so being better than competitors, because what consumers want it's something that is cheaper as much as possible, or is something that's differentiated and the other ones cannot offer, and that's the type of two things characteristics that people tend to look for when they want to buy. And if I buy, people get revenue, and normally if people buy what is already cheaper, they so gonna increase even more the differentiation between the costs that I have to support and revenues that are saved. And so it's really important to look what me as investors understanding comparative advantage, understanding what companies in the world that are included on, what they are like their characterizations that make him better just by understanding the foundations of economy. What are the laws of demand, laws of always trying to look for the better option. Consumers look for cheaper prices, differentiation. What are so the companies that tend to thrive? The ones that have the ability to do it. And so it's like simple concept. It's like the Pareto. It is a reunion of the 20% of things that matters most, and the investors have the ability to understand it. They have the ability and they consume the reports of these companies, they consume the information, they consume the product that they produce, and so they perceive what's good or not. And so this is type small tricks, but what in this something that's really important, they are able to make a action that makes him have the information that they need, because obviously they decrease the opportunity cost of doing it. What they do, they live for doing investors. They already build the environment with, they already like, they are subscribed to journeys that they should on and give their first the information first, and information that's truth other than other investors. They have like contacts with people inside of the company and understand what's like the financial performance even before the reports come to the truth. It's like a comparative advantage that investors, but the higher ones, have built in comparison with ones that we can call as like small fishes. It's something that's really true, but this doesn't mean that what we call as small fishes, as the majority of people that watch my video, it's not means that they will not be able to do their money. It's something that they have to get the ability to kind of make a reunion of the information, understand how to get feed with this information, and that's something that I will develop in the next video. Till now we have developed our our journey of being an investor, and obviously trying to maximize revenue in comparison with costs with simple concepts that we have talked and we're going to develop in the next video. See you in the next one.